Currencies Direct do anything to do with currency, importing, exporting, what's happening in, and obviously with that, they need to be aware of what's happening in the economy, what's happening with the rand, looking at ratings from our ratings agencies, which we love to hate, and sometimes determine our lives quite a lot. And she's going to talk about, what we need to worry about there. As well as, we've just been talking about a little bit about the budget and those effects, because everything like that, it has an effect on what happens to the rand. But and very much we're because we're a third world country, what happens overseas in the US and Europe and the UK also has a big effect on what's happening here, actually more so than what happens locally. But Lara is going to chat a bit more about that. She's quite good at explaining a bit more in layman's terms, and instead of all the investment analysts speak, which we sometimes listen to and think, what? Or it just makes us more scared than we actually need to be. So thanks, Lara. Over to you.
Okay, good morning, everybody. Nice to see some new faces that I haven't met before. I'm just wondering, have you made me host?
Yes, I have.
Perfect, thank you so much. All right, I'm going to go ahead and share my screen with you now. So let me just clear this over. All right, so just very briefly, I'll try and keep this as simple as possible and in as many layman's terms as I possibly can. So just to give you a little bit of background about Currencies Direct, so we are a treasury outsourcing company that specializes in moving money. And we do that obviously in strict lines with exchange control, which is our red tape legislation that we have here in South Africa that governs the flow of funds. So what I'm going to do first off is just give you a bit of background as to who Currencies Direct is. Sorry, just bear with me here. Okay, so who is Currencies Direct? Well, our head offices in South Africa are located at the bottom of Bree Street, opposite Investec in the FNB Portside building. We're a UK-based business with our head offices in London, in Canary Wharf. We opened our doors in 1996, and we employ just over about 500 people globally. Our main banking partners, just to give you a bit of a heads up, who we work with include Barclays, Mercantile, Bidvest, and Investec. What we basically do is we provide an end-to-end service with regards to the remittance and receipt of payments, specializing in both the corporate sector, so your SMMEs, as Claire mentioned earlier, she had a client who was in the export space, and we basically specialize in completing all of the required SARB approvals that might be associated with those transfers, and we complete those services as a complementary add-on to our existing service to all of our clients. We have our in-house exchange control team, and we also have a designated tax practitioner that we work with as well. We don't provide tax advice though, because that's not our area of specialty, but we are able to do your tax clearance applications if required, or certificates of good standing, etc. Just to give you a bit of a review update, so if you do want to go and check us out and find out more about who we are and the services that we have provided, you can go ahead and check us out on Trustpilot. We've got a 97% approval rate from all of our customers. And then we hold the highest level of creditworthiness by Dun & Bradstreet, which is an international data review analyst company, which reviews FSPs and their international operations. Globally, where are our offices? So I'm not going to go through all of the locations you can see there in Spain, quite a few peppered all across the country. But we do have a global footprint all throughout Europe as well. We've acquired our 47 trading licenses in the United States. We've now branched out to Canada as well. And then we actually outsource a large portion of our business. We've opened up offices in Mumbai, which deal with our compliance and red tape. So I just wanted to include a slide to simplify basically how Currencies Direct adds value to any client, whether that be a corporate or private client. This particular example pertains to private individuals. So let's say, for example, that the rand was trading at 21.51 to the pound. what would happen is that if you phoned your bank, they would obviously take the interbank trading rate, which is the rate that if you go onto Google or Bloomberg, or if you've got the XE app on your phone, that's the interbank or mid-market trading rate. So what they do is they add on a few cents, the same way that we do, but they add on quite a bit more. So what we generally see is that they'll add on between maybe 25 to 30 cents in some instances, depending on your currency of selection. And in this particular instance, they would quote you a rate of 21.83. At Currencies Direct, what we do is we take a vastly lower spread. So we add on less cents. The reason being that we're able to do that is because of the volume of money that we're working in. So we trade in excess of about 140 billion Rand a year globally. So that means that we've got a lot more buying power when we're talking to the banks. The same principle applies that if you went to Pick and Pay and you decided, okay, I want to buy a punnet of water, you probably wouldn't buy it at Pick and Pay. You'd go to Macro. Why? Because you're buying in bulk. Therefore, you should be paying less. And Forex works in the same way. So we allow our clients to leverage off of our flows by giving them the reduced rate. In this particular example, a client would save over 20 cents for each pound that he would be purchasing. So that gives you, I hope, a simple physical example. So let's take a look at the delightful Rand. Okay, so I'm just going to go through a couple of, I know we don't like to talk about COVID stats, but it is quite important for us, especially here in the Western Cape, and also from an economical perspective. So overnight, we've seen a jump by 4,500 infections in the past 24 hours. Recovery rates have slowed down quite a bit. We're sitting on 5,504. And our death rates have jumped to 2,000, just over 2,100. Obviously, as anticipated, when COVID did hit South Africa, the anticipation of the peak of the virus hitting South Africa was middle of July to August. We definitely are seeing, in terms of trend ratios, that we are headed on that timeline. And as we can see here in the Western Cape, we are running at number one with over 52,554 confirmed cases. And obviously, almost half of that figure closely followed by Gauteng, sitting at just over 22,000. So it is very important to also understand from a demographic perspective, we definitely are a hotspot. So it does mean that we all have to be a little bit more vigilant here in the Western Cape, especially on level 3 advanced release of lockdown. In terms of South Africa and COVID-19, so South Africa had a lot of challenges that it was faced up against long before COVID came. The Moody's downgrade was very much kind of almost on the cards. It was just not noted when that was going to happen. And unfortunately, due to declining GDP levels, and as we heard, unemployment figures released yesterday for the first quarter of 2020 sitting at 30.1%, with obviously the ratings agencies' outlooks on South Africa at the moment, we've got a very, very, very big hole to try and kind of find our way out of. So what did Treasury do? They came back and they said, right, here is a 500 billion stimulus package, which had been raised from various sources, but not all of it. But now today at 3 p.m., we'll hear Tito outline how that 200 billion loan scheme for businesses is going to be implemented. And for many of you working in the SMME space, I think that it's going to be very important for us to listen on how this is going to be rolled out. Cyril Ramaphosa on the 18th of this month confirmed, obviously, that South Africa's economic response to the coronavirus will now have to include a zero-based approach budget. So what that means basically is that you'll start from a zero base, and every function within any organization will be analyzed in accordance of its needs and its costs. So again, Tito will outline the structure of this and how it will be rolled out. Obviously, we can assume that this will be applied to government sector and the dreaded SAA. But yeah, we'll have to wait and see on that. In terms of recovery times, initially when COVID hit, the following week we had the Moody's downgrade, which we thought was largely priced in, and it wasn't. There was a bit of a further slide, attributed obviously also to lockdown being implemented as quickly as it was. The original timescale period was 2 to 4 years in terms of recovery. Obviously, for many reasons and for what many of us have read online in terms of business closures, the tourism sector taking a very, very, very hard knock, Sasol having the effect that it did when the oil price kind of plummeted, it's likely that we're going to take a bit longer. It's going to take about 3 to 5 years, if not more, in order for us to see full recovery. Bearing in mind, we were not in a recovered state when we started this whole process. So there is some good news in that. So I just alluded to now the fact that obviously junk status, although a lot of the economists did say that it was largely priced in, it wasn't. There was a little bit more of a slide. This graph just gives you an outline in comparison to the pound. The reason I've used the pound is also you can see from December 2019, obviously there were Brexit negotiations, there were trade talks, there were things, you know, that were busy being outlined in terms of the EU having to, or sorry, the UK having to renegotiate all of its trade agreements with its trading partners. So within context, that's why I've used the pound on this particular slide. You can see when COVID arrived in South Africa, just if you just look slightly to the middle between the 2nd and the 9th of March, we were already trading quite on the back foot, largely attributed to the fact, obviously, that there was a lot of pound strength, but there was also a lot of economic uncertainty. And in the latter week, when junk status came through, we did see the rand slide by a further 1, which is quite indicative in terms of we need to understand that both from an economic perspective for growth within our country, as well as our ability to operate and do business in this country, we are kind of bound to what government permits us to do and not to do. Therefore, announcements such as this afternoon coming from Tito with the emergency budget release, it's going to be quite pressing to see what happens in terms of the ratings agencies. A lot of them have said that we are more uncertain now than we were in 1994. But in that being said, the world is in a very uncertain position. So we're not the only ones in this boat, but from an economic framework, looking at South Africa in kind of a snapshot, it's definitely going to be critical to see how small business, or not small business, but any SMME is going to be given the support it needs, not only to operate, but to generate work and jobs. So where was the dollar to the rand? So I've taken this snapshot from the beginning of the financial year here in South Africa, and you can see it kind of looks like an ECG report that you don't want to have when you go to your doctor. As you can see, as COVID kind of hit in April, we saw massive spikes, huge amounts of weakening on the rand, but then obviously the US economy and the US president kind of weakening in some respects, largely due to Trump's ability to tweet and be online. So the market is very, very, very volatile to certain announcements and relations that the US president as a whole has with global business. So Claire actually alluded to it earlier. There's a saying that goes, if the US sneezes, South Africa catches a cold. And that's largely because our currency value is taken largely against what the major currency values are. So in terms of depreciation, when the US economy has an issue with or makes an announcement or has a press release with the trade talks, for example, with China, of which obviously Trump has said, the trade plan is very much intact and very much solidified at the moment. It means that when the dollar strengthens, we subsequently have a sharpening fall. So we are going to definitely see a lot of volatility. You can see that the rand clawed back a lot of ground towards the middle of June, and now we see ourselves hovering at this new mark of about 1730, 1725. We'll wait to see what the announcement has got to say today in terms of Tito's speech, and we probably will see some volatility, but it will largely be dependent on what implementation structures Tito outlines. So the rand opened this morning. Yesterday we opened at 1734. This morning we opened at 1722, which was quite positive. Investors are hopeful that obviously Tito will deliver as positive a budget as can be expected. Treasury obviously finds itself in a situation at the moment of having to revise the budget that it released in earlier this year. It's going to be a difficult thing to address because funding needs to be given, but also the deficit needs to be addressed. So it's sort of this balancing act, and the balancing act requires money, and we don't have money. So it's going to be interesting to see potentially where they are going to try and find those funds from. Donald Trump, as I spoke about earlier, is trying to reassure investors to keep a risk-on sentiment, that, you know, the trade deal is still in operation, it's fully intact, although we all know that obviously he's got a volatile relationship with China. What we will need to look at, though, is the comments coming through from Peter Navarro at the White House later today, who had hinted at severing ties between the US and China. Now, obviously, if that takes place, which is unlikely given that China is the largest manufacturer of everything from our SIM cards to our Tupperware lid containers to our clothes, there will be a big ripple effect on the currency conversion. So if you are importing, it means that you may need to look at slightly better hedging strategies in terms of FECs or forwards that you may need to want to look at when the rand is sitting at a stronger position. There could be a bit of a risk-off sentiment if Tito's emergency budget, which comes through this afternoon, is not negative, but maybe not quite what needs to be delivered. Then we could see, again, investors looking at selling off risky assets, of which South Africa is one. As a side note, though, I think it is very important to bear in mind that South African retail bonds are still highly attractive to foreign investors. And even though we did see the mass pullout, I think it was at the end of April, in terms of pension funds not being allowed to be invested in sub-investment grade country portfolios, private investors still saw a lot of value in South Africa. Within the first 2 weeks of lockdown, there was in excess of 1 billion rand purchased of SA retail bonds by private individual non-resident investors, purely because of the returns. Obviously, those returns are largely dependent on bond repayments, debt repayments, and the correlation between that. And as we've all heard about at the moment, everybody is struggling at the moment to make repayments, to find relief. Some banks opting not to provide relief, but rather to give you an extended loan to be able to service your debt in a 3-month window period. That not necessarily being as attractive from a financial planning perspective, but definitely maybe a short-term solution. All of those plans and proposals that were put forward by the banking sector to support that correlation relationship between bond repayment or debtor and investor. So it's quite important to take that all into account. I thought I would just kind of go through. There's a lot of scope on this particular slide. We're seeing some economists. So this particular table is courtesy of Standard Chartered. Obviously, they have the largest banking footprint all throughout Africa. But I just want to draw your attention, if I may, to the US dollar and the euro. So if we look towards the third quarter of this year, so taking us forward to September, we can see here that the dollar they are projecting is going to be sitting at 17.25 to the rand. But I'm sorry, 17.25 to rand to the US dollar. The euro will be sitting at 18.46. Now, if you just kind of glance your eyes down, you'll see there that the pound sits at 21.91. Now, Standard Bank has predicted that by the end of the second quarter of next year, so that takes us first quarter being end of March, and then third quarter taking us sort of May, June, we're looking at 15.50 to the US dollar, 18.91 to the euro, 24.49 to the pound. Now, why is that? Okay, so basically, in essence, obviously with the UK having to proceed with their Brexit talks on the back of having to manage COVID quite actively, and also their release to their economy, Standard Charter's, their anticipation is that the UK will kind of become your new super hub as to where the US was. And that's why with the US dollar weakening, that's why we would sit at 15.50. But with the pound strengthening, we will sit at 24.49. So for your swallows and your UK pensioners that are here for 6 months of the year and 6 months abroad, it's going to be quite an attractive situation. I know that there's a large community of those people peppered all throughout the Southern Peninsula and southern suburbs. But again, is the second stone? No. I personally anticipate that the gauge is a little bit high. I think that we should be able to get a more accurate look at what might happen towards the end of this year after we hear what Tito's implementation plan is later on today. Also taking into account inflation numbers, it does need to be looked at. Certain costings on certain items has definitely increased. specifically if you are an exporter in certain spaces. Minerals have become more costly in terms of in the manufacturing sector. So it's kind of a holistic look, but this is not Currencies Direct's view. This is Standard Chartered, so it's just an idea. So that's pretty much it from me. I am open to all questions and I'll try and answer them to the best of my ability. I just also want to open up to all of you. We have 3 publications which we issue to our clients and also people who just simply would like some more information. So we have a daily mailer, which is a short, concise 4-sentence summary of what you can expect to be happening in the markets on a daily basis. And it literally just gives you a little bit of an overview of what will be taking place, what announcements are coming through, and what the opening rates are on your major currencies. Our second publication that we do is something called The Bright Side, and we are partnered with Dr. Roelof Botha, the economist, and he's always got a very positive outlook in terms of what the real effective exchange rate of the rand is in comparison to other currencies, as we are an undervalued currency. That publication comes out in the first week of every month, and if you'd like to be added on to the mailing list, it's not spam. You won't get spam messages. It's literally just information for you. You are welcome just to pop me an email. I'll enclose my details on the chat bar, and then I'm happy to add you on. Further to that, we've also got our newly released during lockdown. It's our podcast, and that happens every 2 weeks, and that's direct from our one of our head of corporate dealing, and that's Justin Ludovic, and he gives you a summary of what you can anticipate and potentially how you could hedge and what strategies you should be looking at if you are an SMME. It's very, very, very articulate. It's very, the terminology is very basic, but it really is so valuable. And I think for a lot of my corporate clients personally, it's kind of become the when is Justin going to be speaking? So if you'd like any of those publications, you're welcome to drop me a mail. And then if you've got any inquiries at all with regards to Forex in any way at all, whether it's exchange control, if you have a query with regards to maybe if you need SARB approval or if you have the required approvals in place, you're welcome just to drop me an email. I'm here to help. It's not all about getting you on as a client. We've been working with Claire I've known Claire for a number of years. But we're really here just to be a value add and to add value to your businesses if possible. And that's it from me. So I'm just wondering, who should I put as host?
You can just do Recro Business Services.
Okay, cool.
Oh, thanks, Lara. I always find it so interesting how, all these things correlate and, have an effect on each other. And I think sometimes, often as South Africans, there are obviously things that affect us, but there's so many things that affect us. We think like, oh no, the government's stuffing up again. There goes all our wealth and everything. But really, usually those things don't even have a blimp on the, depending on what else is going on in the world, on the rand and that. It's I think, as you said, everything is. It was quite interesting for saying, we're more uncertain now than kind of we were in '94, which is, I think, the sentiment of a lot of businesses at the moment.
Yes.
And I'm finding, as well as the economy is opening up, people are still not spending. They're, it's very cautious, and people are very grateful for any business, but they're kind of running at maybe 30-40% of what they should be running at. I had a look at the Yoko credit, those Yoko little cards for small businesses. So they've got quite an interesting thing on their website where they analyze pre-lockdown and then April, May, June, and you can think things are picking up, but it's 50% of the pre-lockdown is kind of where the credit card sales spend is, which is quite a good indication for small businesses. But yeah, we hope it picks up. People are uncertain, and we hope we get some certainty soon, which again is outside our control. But very good to know how these things work and what we can actually do about it. But also good news about, the pound is an interesting one. Standard Chartered's kind of prediction, because all the other predictions are that the US is gonna, be the main guy until about, I've heard until about, what's it, 2031 before it goes to the east. But
yeah, no, I think unfortunately the Black Lives Matters protest had a massive hit on the dollar, and I think that the timing of it specifically wasn't favorable. Everybody was dealing with COVID, and for them all of a sudden to kind of have this political rhetoric kind of coming through with people that are already emotional, already anxiety stricken, but then a presidential campaign responding to it in the way that he did as well was not optimal. And that scared off a lot of investors, because all of a sudden you've got riots, you've got protests, and they weren't handled necessarily. I mean, not that I'm a politician or know how to handle anything like that, but they, from a media perspective and from the global perspective, all of us in reaction to that, we went onto our Instagram and we posted these black boxes. Now, if you think about it, we're living here in South Africa. We live every day with a political rhetoric. And now all of a sudden, because of something that happened in a first world country, the trickle effect of that was massive. All of a sudden, everybody all over the world was posting Black Lives Matter, which 100% they do. But the thing is, it happens here in South Africa every day, but our reaction is not that. So I think it's very important from a context perspective to understand that the US economy's got a lot going on. They've got a lot to manage. From an implementation point of view, their trade talks with China haven't been ideal. It's been an ongoing debate. It hasn't necessarily worked out in their favor, and it's not a solidified relationship at all. In the background, you've got Trump bartering and Johnson & Johnson on trying to be able to be the first people to buy one of the hopeful, successful vaccines. Johnson & Johnson as a company saying, no, we're going to buy it at the lowest possible price to distribute at the lowest possible price globally. Trump saying, I'm buying it first, the USA will have it first, and that's that. That kind of rhetoric doesn't speak well to investors, not long term, because if you've got any offshore-based investment portfolio, whether that's with Alan Gray Orbis or Global Select Access with Investec, you've got waiting in China. You want the Chinese economy to get up and go. So when the US economy says, oh, actually, no, we don't want to be able to build or do trade with you, all of a sudden that closes on the dollar weakens, and all of a sudden we regain quite a bit of ground. So that symbiotic relationship is very, very, very important. And I think from a political rhetoric perspective, if you look at all the years that Zuma kind of plagued the presidency for the period that he was, in terms of calls that he made and certain kind of rollouts of legislation that took place under him, it's important to bear in mind that during his presidency, only 10% of the movement on the Rand was attributed to what he said. The rest of the movement was all attributed to what was happening globally. So as much as we're very much, stressed, South Africa, doom, gloom, it's all going downhill, very little of what impacts us has got to do with what's going on from a political perspective. Today, 100%, we are very much dependent on what Tito comes out with. Why? Because it's no different to any other country globally whose finance minister has to come up with a plan for a bailout, which everybody needs, and everybody is sitting in a really, really, really tight space. So today's announcement will definitely have an effect. If you're looking at, if you're an importer, depending obviously on what your, not services, but what your actual product is, you might want to look at certain FEC or forward contracts in terms of pricing and hedging strategies. At Currencies Direct, we offer a 0% FEC, so we don't require surety, provided that you can give us, your supporting documentation, how long you've been in business for. So if those are certain things that you do need to look at, give us a shout. In terms of, your importers, again, it's kind of a prime time. The Rand is sitting a lot stronger than what it was when we were kind of 3 weeks into COVID-19. So again, very good opportunity to kind of look at that. What are your CFC accounts doing? Are you being able to remit payments for products that you might be bringing into South Africa directly from your CFC accounts? Do you have the SARB approvals for that? So a lot of planning opportunity right now.
Cool. Thanks very much. I don't know if there's any questions from anyone.
Mark looks like I've bored him. Sorry.
No, not at all, not at all.
Okay, cool. Cool.
No questions. Lara did a good job of explaining.
Hi, Lara. I'm John.
Hello.
I just wanted to find out, because I see you've explained quite a bit with how the South African Rand is affected. I think most small business owners are not quite up to date, or they don't really know how that the Rand is affected more by what happens on the outside and not what happens in SA. So if I was a small business owner and I've got transactions that involve foreign currency, is there any advice that you would give to me in terms of foreign currency for FECs that I need to get into in order to be protected from any forex risk? So would I come to you and you'd give me advice in terms of what's happening outside and what I need to do?
So basically the way that we support all of our corporate clients is that we tailor make solutions specifically designed to your business. And we work clear across the board from tire importers to vehicle manufacturers in the environmentally friendly space, building here in South Africa and exporting. So it really depends on what your business is. Even if you're a citrus exporter and you're growing oranges on Zibadile farm in Limpopo. So it really comes down to what is your business. So it would be about actually spending some time with you telling me, right, this is what I do, this is what I'm buying, or this is what I'm selling, or this is the nature of what I do, what your annual Forex turnover is, and certain details around which countries are you actually doing business with. So for example, are your main trading partners the UAE and China? So what would the strategy be behind that? So I think what might be a good idea is, if you would like, you can pop me a mail and then we can set up a Zoom call, and then you can give me a better understanding of how your business works, what you actually do, and which countries you're working with. And then we can kind of build on that and come up with the plan that could potentially be better suited to you. In the corporate space, in terms of Forex, obviously corporate and private rates are very different things because of the volumes. So obviously a corporate business is doing Forex trades more often than a private individual. Therefore, the spread is a lot lower. But the banks don't give those lower spreads. The banks apply the private spreads. So the example that I used in my third or my fourth slide, where they apply like maybe 25 or 30 cents. Whereas a corporate entity, for us, we won't exceed maybe 4 cents.
Yes, yes.
So there's a radical saving there, and that comes down to you doing multiple payment flows with us. And we support our corporate businesses by also removing a lot of the admin from your hands. So at the moment, if you're working through your bank or Bidvest, you're probably having to do something called a BOP form, which is a balance of payment query. And on that form, Bidvest's document is 8 pages long. Nedbank's got a 3-page document. But basically, we actually do all of that for you. So once you come over to Currencies Direct, all we need from you is the invoice from your supplier or to the supplier that you might be furnishing payment to, and we handle the rest, provided that you can give us a full picture and in terms of information of what your business does.
Okay. Yeah, thank you. I do see your email address is there. I think I will pop you an email.
Cool.
Cool. Anyone else? Cool. I think we're gonna wrap up. We've got Lara's email address, and we'll post details on Facebook and that. So if you want to have a re-listen or get hold of her, you can. All details will be there. Lara, thank you so much. As always, very informative, and yeah, I love it. I always find it interesting, you know, how, as I said just now, everything affects everything else, and it's very symbiotic, and it's, as you also alluded to, interesting how some people ignore the symbiosis in a lot of areas, and not going to get into any of those examples right now, so it could be another one. But yeah, I think it is a thing in life that everything affects everything else. So yeah, to watch out for those things. Thank you so much for joining us today. We really, really appreciate it.
Anytime.
Yeah, cool. And thanks everyone for being here. Thanks. Cheerio.
Bye.
Bye.
Thank
Thank
you.
you. Bye. Thank you.